but I'm not saying gold's going to 36,000. But I think it would be a mistake to think that gold always should just trade between this price and this price. And so I don't think there's a magical number to say other than the faster we get to higher numbers, the more likelihood more troubles exist in the world, not less troubles. What was happening on the world trade front was net negative for the United States and net positive for those that are going to be part of the new and growing organization called the BRICS. And a side note from that was one of the main reasons that I stayed so bullish on gold, because I believe they were moving towards an accumulating gold, because when they got to their proper size, they were going to use gold in some form in how to trade with expanding partners that were coming in. So I was already betting on de-dollarization, the United States losing its world economic prowess.
Central banks continued their gold buying spree in February, adding 24 tons, the highest monthly total since November, amid rising economic uncertainty. By 2024, the key driver behind this accumulation was the growing threat of a de-dollarized global economy. BRICS nations, in particular, have aggressively expanded their gold reserves, now holding over 20% of the worldwide supply. This move signals a clear push for financial independence and a shift from reliance on the US dollar. With the US threatening broad tariff hikes, momentum toward de-dollarized trade will likely accelerate. Peter Grandich says Trump's tariffs boost BRICS nations, while $3,300 in gold prices fuel gains for gold producers. He's remained bullish on gold, believing BRICS has been quietly stockpiling it as part of a long-term strategy. Grandich also sees rising retail interest in silver. He recalls deciding to accumulate gold years ago, sensing a global trade shift away from US dominance. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
A few years ago, long before Trump even got elected again, I made the decision that what was happening on the world trade front was net negative for the United States and net positive for those that are going to be part of the new and growing organization called the BRICS. And a side note from that was one of the main reasons that I stayed so bullish on gold, because I believe they were moving towards an accumulating gold, because when they got to their proper size, they were going to use gold in some form in how to trade with expanding partners that were coming in. So I was already betting on de-dollarization, the United States losing its world economic prowess. And I have to tell you, the moment, and this was even a few weeks before he announced the tariff move, when he made his announcement about that anybody in the BRICS who trade again and don't trade with the United States, he was basically going to break their kneecaps. I wrote that this is going to come back to bite him. This is not the way strong-arming people into this. And when you get Canadians, and I know I'm speaking to one, who in all the years I've ever dealt with any Canadian, never the slightest, oh, I can't stand you Americans, or you, Pete, and all. No nicer people had ever been to the United States. You can go on either side of the border, not even know that you even crossed the border many times. And when you get Canadians booing Americans because a guy basically says, oh, I'm just going to make you another state of ours, he's just gone about it all wrong. Now, I'm not an anti-Trumpster, Steve. I'm not a MAGA either. And so I get it from both sides. Both sides don't like me because I'm not fully on their side. But I think the net of this is who's ever in charge of new membership at the BRICS wants to send him a Christmas present already, because he made marketing for the BRICS easier than harder. In the last 25 years, or since January 1st, 2000, gold has greatly, not just snuck by, but greatly outperformed equities and bonds. So you would think financial advisors, who people go to be the experts, would have clients, at least here in the US, I don't know about Canada, having real ownership somehow of gold. And yet the average portfolio is estimated to has less than 1% exposure to the gold market in the US. I like to ask those clients, to ask their advisors, how come you missed it? How come we don't have the best? You got me loaded up on stocks and bonds. Okay, I understand your arguments there. How come I don't own any gold? And part of that reason has always been is they can't churn it, burn it, and flip it, make it 8 different things, collect all sorts of money on it, and it's no one else's liability. That's the other problem, that they've always had with it. And so what happened in that time, Steve? We've seen central banks go from very aggressive net sellers to huge buyers, to the point of numbers no one can even believe still at this point. And 33 separate countries repatriate their gold from the US and London for what? Not a trade, Steve. Who do they flip it to? They're not buying it because one day they hope to sell it and make money on it. They're buying it for a purpose. And the purpose has always been, in my view, surrounded regarding the BRICS, that these countries realize sometime in the future, because of all the indebtedness in the world, and particularly in the world's current reserve currency, gold is going to have to be used in some form to get them out of the mess. And so whether or not it has 500 correction in it or another 500 run up before correction, the important thing to recognize is there's nothing in a fundamental argument other than maybe technical overbought to say that gold has reached its ultimate peak here. And can I make one other comment, Steve? I hate to be dragging on here, but this is important. So when I entered the business in the early 1980s, the stock market, the Dow had gone for like 12 years, just between 700 and 1,000. Interest rates were 20%. Inflation was double digit. We were about to have a war any day with the Russians. Japanese were taking over the world at that time, not the Chinese. And we were so poorly viewed about equities that Business Week ran a famous front cover magazine that said equities are dead. The stock market will never really get past 1,000. And some unknown young guy came out of Gainesville, Georgia, named Robert Prechter Jr., and predicted 3,600 on the Dow Jones Industrial Average through a technical analysis program that no one really knew about, Elliott wave theory at the time. And I remember people scoffing about him, even on Wall Street Week at the time. Who does this kid know? Doesn't he know the Dow really doesn't go above 1,000? Well, not only did it get to 3,600, Steve, it got to 10 times more than that. And why I bring that up, and I'm not saying gold's going to 36,000, but I think it would be a mistake to think that gold always should just trade between this price and this price. And so I used to get in trouble for years, if not decades. When I was bullish on gold and asked about silver, I would say it's like kissing your sister. And the silver bugs would just rip me, apart. But about 2 weeks ago, I concluded, especially after listening to one or two very smart people that I concluded are even smarter than I am when it comes to that area, clearly identify that the market is being held back on purpose at certain levels. And I've learned that sooner or later, when anything is manipulated like that, it gets overrun. And when it does, it makes up for lost time. And then the fact that the ratio had gotten to the level that it's gotten to now. And one of the reasons that it did, like you just said, it did in the past, is because the public comes in. And when the public comes in, there's no stopping them. And public tends to like lower price quantity versus quality. They rather buy $3,200 worth of silver than $3,200 worth of gold at this point in time. So that was the other reason. In terms of companies, that is the 1 in 1,000. I think that's the dream stock that I waited decades for. And of course, that's why it became my number one. My number two is something that 2 years ago, I might have said the same similar thing, but management has been extremely disappointing on the marketing IR side, but they still have phenomenal projects, and that's Arizona Metals. And then the third is a company in an area that I love in Canada. It's operating in Quebec and also through a subsidiary in Ontario, and that's Northern Superior. And there, a camp is being developed where I Am Gold and them are the major two players. And eventually, someday, somehow, those two companies need to combine to make that one big player in that camp. And I think the stock could be worth a lot more than it currently is. There's probably several hundred juniors that shouldn't exist, Steve. They basically exist because they're lifestyle companies for the guy or gal that's running it. Price doesn't first go up and then volume comes in. Volume comes in because of the last of the sellers or people that are just glad it went back up a little. And so volumes on unchanged days isn't bad, especially in a stock that had already moved a lot, because that's a change of ownership and a consolidation that the company needs.
In 2025, gold prices jumped by 25%, following a 28% rise in 2024 and a 15% gain in 2023. This sharp $1,000 per ounce increase over the past year marks one of the fastest climbs in recent history, far outpacing the steady growth in previous years. With fears of a tariff-driven recession, a weakening U.S. dollar index, and escalating geopolitical tensions, investor interest and central bank gold purchases are expected to remain strong soon. Do you see gold hitting $4,000 next, or will it pull back before the next leg up? Please drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more.